Hello and welcome. You tuned into Market Fatafat with me, Ankita Saxena. For the next 1 hour, we'll get you all the top buzzers in trade, either on the back of news flow or on the back of technical charts. But first up, let's take stock of how the market is shaping up. Well, as of now, the top buzzers on the back of earnings that are trickling in. We see Cipla that has reported its quarter one number. It's flashing right at the ticker right now, and that is seeing a lot of movement right now. In fact, right after the stock, look at the sharp jump up that the stock is seeing, almost a 3% gain coming in on the back of the numbers that are coming out for Cipla. As you can see, quarter one numbers, revenue is at 6,957 crores versus an 18 hour estimate of 7,000 crores. On the EBITDA front, it looks like an inline set coming in at 1,778 crores. As far as the PAT is also concerned, if you can get the numbers, margin, there's a beat coming in on margin, 25.6% versus our poll estimate of 24.5%. So a beat is coming in on as far as the margin front is concerned. We'll get you more details for Cipla, but right now, clearly the stock is seeing a jump up of 3%. That's also the top Nifty gainer for now. But as far as the markets are concerned, Nifty and Nifty Bank, both of them have moderated. In fact, they are hovering around the day's lowest point. In fact, Nifty is below 24,900 as of now. And all the sectoral indices are in the red, barring just Pharma, which has been holding out in the green. So net, it is a day of declines coming in for the market. Advanced decline ratio clearly in the favor of declines today. But let me get on board Kunal Shah, who's a senior technical and derivative analyst, Mirae Asset Share Khan, who's joining us on the technicals, and from our research team now, we are joined by Kanishka and Ravinder. Hi, good afternoon to all of you. Thank you so much for joining us today. Let's get started with all the stocks that are in focus then. Let's pick the first stock, and that is Bajaj Finance. Now remember, Bajaj twins, also Bajaj Finance, Bajaj Finserv, are trading with deep cuts of almost more than 4.5% on the back of the earnings that Bajaj Finance has come out with. Now, if you look at the scorecard, we did see the NII that came in above PPOP and PAT were also above what we were expecting, but it's basically the management commentary that has been a dampener. So let's take a look at the numbers first. The NIIs are up 22.3% on a year-on-year basis. The PPOP are also up 22.2%. PAT is also seeing an uptick of 20% on a year-on-year basis. And the loan losses and provisions have increased, though, by 26% for quarter one of FY26, and the total AUM was at 25%, but 2 to 3-wheelers, the AUM was down 20%. Now, let's look at what the management had to say that is weighing on the stock price right now, and that is the fact that the credit cost still remains elevated. Deposit contribution is likely to go down to 15 to 16% of the consolidated borrowing from 19% in this quarter. The consumer leverage remains a point of concern, and the credit cost remains elevated in the 2 to 3-wheeler space, and the credit cost is expected to decline from quarter three. So that's the word coming in from Bajaj Finance management, and on the back of that, that is really a way the stock down with cuts of more than 4.5%. But let's go across to another candidate that's in focus today, and that is Nestle India, that has reported a weak set of numbers. Rabinder, take us through the fine print of the earnings.
Well, yes, Nestle India reported a weak set of number in yesterday, and yesterday's stock was also down by more than 5 to 6%. And today brokerages has come out with a note, and few brokerages have downgraded the stock. Motilal Oswal has maintained their neutral rating with target price rupees 2,400, and they believe that the volume growth was in the low single digit, and enhanced capacity will support long-term demand but pressure margins and returns in the near term. Apart from this, CLSA has also come out with a note, and they have downgraded the stock to hold from accumulate, and they have cut target price rupees 2,436 as compared to earlier target price rupees 2,695. Goldman Sachs has maintained their neutral rating, and they have cut target price rupees 2,300, and Nomura has also maintained their buy rating with target price cut, and Morgan Stanley has maintained their overweight rating with target price rupees 2,081. So back of the downgrade from the brokerages, Nestle India is in focus, and the stock is down approx 2%.
All right, that is Nestle India down and now 2% on the back of quarter one results. But let me come to you then. Kunal, you've picked out Syngene for us. Now, Syngene is doing very well. In fact, that is up in a way more than 5.5%. Syngene, tell us what you see on the charts for this counter. I mean, Syngene in the last 6 odd months, in fact, it's in the last 1 month that few weeks that it is started seeing some traction. So from here on, what do you see on the charts for Syngene?
I think overall, if you look at Syngene, the stock had recently seen a sharp correction. Now, 600 has been generally the demand zone for the stock. We have seen multiple times the stock has touched around 600, 610 zone, and from there it has bounced back sharply. And same has happened again. Recently, the swing high, which was of 670, that was broken out, and now that is acting as a support on the downside for the stock. So I think Syngene continues to be a buy for me at the current levels. Keep a stop loss of 665 on the downside, and one can look for targets of 740 to 760 on the upper end.
Yeah, right. So that's Syngene on the charts, but let me come to you, Kanishka. You picked up BEL for us. Tell us what's really aiding the stock in trade today.
That's right. So Bharat Electronics is in focus today after securing fresh defense orders worth 563 crore rupees. These new orders span across a range of critical defense equipment and systems, including the National Maritime Domain Awareness System, Inertial Navigation System for guns, and advanced communication equipment as well. Some of the other components of the order include active antenna array units, SATCOM interception system, seekers, target acquisition system, jammers, spares, and related services. And that's why the stock is in focus today. However, alongside the downside that we are seeing in the market, the stock is also trading red today, down about 1% at those 394 levels as we speak.
Life, the company reported a steady results in the first quarter. The MD and the CEO of the company, Amit Jingram, interacted with ET Now, and he discussed the company's growth outlook going forward. He also touches upon the issues of mis-selling and growth in bank assurance business. Listen in to an excerpt of that exclusive chat.
Our focus during the quarter, and in fact for last several quarters, has been on the product mix, so that our margin improvement matrix that we want to improve. And if you look at the numbers, our traditional products like non-participating products, participating and protection products, the contribution has increased in the product mix. So that has taken care of sort of the slightly lower, I mean 9% and 10%, not much difference.
Okay.
So
what is the contribution of the non-par now after Q1?
So during the quarter, more than the non-par, the growth was in our participating product, because at the end of the last quarter of last financial year, we launched some participating product, especially in the child segment. So there was good growth in the child segment and participating product. We also had very strong growth during the quarter in protection segment.
Okay.
And this segment growth was strong in both group as well as the individual side.
VNB margin is 27.5%. So are you confident for this fiscal?
So our guidance at the end of last financial year was also 26 to 28%, and we will continue to stick to that guideline.
Okay, 28%. Yeah. And sir, ULIP contribution is declined to 58% of AP. Is there the structural shift for this?
ULIP for last 2-3 years has been flavor of the market because of also the performance of the equity market, which for the last 1 year is somewhat like having volatile kind of situation. In that we sensed an opportunity and strengthened our product portfolio in non-participating and participating products.
Sir, a lot of discussions going on for the bank assurance channel. There are reports also that IRDA may cap bank assurance for the parent bank. So, as per your discussion with the regulator, what is the latest development, and if there are any rules, IRDA come up with any rules, what kind of impact would be on SBI Life?
We have discussed this question earlier also, and the approach of the regulator has always been very consultative. All the murmur about the mis-selling, the banca and everything has been more in media than in any regular interaction with the regulator. Our approach has always been very customer centric, and during this period also we have had a very decent growth in the banca channel. I am sure that our position in the banca channel as well as in the agency channel is very strong, and we are confident.
the management of SBI Life. Kunal, you have also picked out SBI Life for us. That counter has come out with its earnings and all have beaten what ET now was estimating. In fact, even the brokerage note, even Nuvama has hiked the target price for SBI Life. So clearly it is doing very well today, but also it has outperformed in the last few months also. So tell us on the charts from here on, where do you see the stock headed? What are the levels to watch out for in SBI Life?
Yeah, I think definitely it has been one of the outperformer in the volatile market, and I think there is still some good upside left into the stock. So I can expect the all-time high for the stock on the higher end is 1900. So I'm expecting again stock to touch that level on the upside, the mark of 1900. So the short-term view continues to be on the positive side. The recent swing low which the stock made 1775 on the downside, that should act as a stop loss for the stock. I'm expecting 1900, and once we break above 1900, it can even come towards the mark of 1980, 1990 on the higher end. So the view is positive. Keep a stop loss of 1775 on the downside.
Well, a view positive coming in for SBI Life, but on the screen we can see Shriram Finance coming out with some numbers, and of course stock tanking of 3.5% down. But do remember, most of the NBFC counters are down after Bajaj Finance weak commentary came, especially on the MSMEs front. The numbers are coming in. PAT has jumped up 8% on a sequential basis. Net interest income roughly 10% Numbers largely look in line to slight weak, but because of the overall conditions coming in from the market leader Bajaj Finance, as Shriram Finance also seeing a negative downtick coming in. Provisions also rising up almost 8.5% plus. Gross NPS, that's the number that has actually deteriorated. Sequentially, the number has gone up. The gross NPS almost 4.5% as compared to almost the same numbers, but the net NPA that has actually improved. So mixed signals coming in when it comes to the asset quality, but overall numbers seem largely in line in the current levels, and internals also we'll be checking. So a slight recovery we are seeing in the stock as well. So it's not that bad also, which of course most of the NBFC stocks had taken a tanking post Bajaj Finance commentary, but we will be having an eye onto that stock and we will be following the con call as well. But now let's move on from finance stocks to the chemical space. The SRF is in focus. SRF had a con call after market hours yesterday. Important thing from the con call is that management is eyeing a favorable pricing environment in some of the key products. Also, interestingly, capex announcements was there, roughly 740 odd crore rupees of it across two products. Agrochemicals also was there included in it, but net the numbers yesterday were in line, and the stock is volatile, and we are seeing profit taking in this counter as well. Stock is down roughly 3%
All right, that's SRF. Down and out more than 2.5%. But let's move on to the next counter, and that is Zydus Life. Kunal, tell us what do you see for Zydus Life on the charts? What are the levels? And Zydus Life, again, a counter that's doing decent in today's trading session as well, but it hasn't really done much, in the last few months. It hasn't really performed that well. So from here on, where do you see the stock headed? Why have you picked out Zydus Life for us?
I think Zydus Life, again, as you mentioned, out of the entire pharma space, this has been the one stock which has been on the underperforming side. And I think now the entire bad phase for the stock is over. On the longer term charts, I see that whatever dips the stock has got into, that has been bought in aggressively. Even fundamentally, if you look at the stock, it is very cheaply available. So that's again a good risk to reward ratio for the stock as well. And I'm expecting this uptrend to continue for the stock. And even for the current levels, I think the risk to reward ratio is extremely favorable for the stock. So on the downside, the 100 DMA, which is placed at 920, that should act as a stop loss on the downside. On the higher end, the first target, what I'm expecting is the 1060. That is the gap area. And once that is taken out, the next target directly comes at 1200. So I think Zydus Life should do reasonably well from the current levels. And I think pharma is one of the space in this volatile market where you can hide into.
Interestingly, pharma is a place to be when there is volatility in the market, rightly said Kunal. But moving on to the realty space, Phoenix Mills is in focus. Q1 numbers were largely stable. A strong inflow coming in a sale of a certain stake in a JV as well. Rabinder, broking upgrades also in the offing. Could you give us more details on that?
Well, as Phoenix Mills is in focus, where company has reported the Q1 number yesterday after market hours, and company reported a strong set of number in Q1 where revenue grew by more than 5% year-on-year basis, and if we talk about PAT, then PAT also grew by 3.5% at 241 crore. Apart from this, company will also acquire the 49% stake held by Canada Pension Investment Board in the joint venture Island Star Mall Developers for rupees 5,449 crore. And there are some brokerages note coming in where major brokerages has upgraded the stock. HSBC has upgraded stock to buy from hold rating and had target price rupees 2,000 as compared to earlier target price rupees 1850. And ICICI Security has also upgraded the stock to buy. CLSA has upgraded the stock to accumulate from hold rating and had target price rupees 1790 as compared to earlier target price rupees 1720. And Axis Capital has also upgraded the stock, and so back of this brokerage upgrade and strong set of Q1 numbers, stock is up more than 5%, and stock has registered its biggest intraday gain since November 2024.
All right, before we get to